themes that we are clearly picking up on the AI side. More investment in India, a lot more representation from the states. I think those are things which will facilitate investments, not just in capital market, but in real assets, in infrastructure, and beyond and so forth.
Yeah, just to add on, we are clearly seeing strong government presence here. We have 3 Government of India lounges. We have the CII lounge. In fact, we have 5 different state governments also having their own lounges. And just to build on to what Ashish mentioned, what we are seeing is the government officials are clearly trying to understand the bottlenecks, if any. It's not just the chest thumping. There's a clear and honest exercise to understand the key investor concern. We ourselves have been instrumental in getting a lot of large investors, be it private place or public place, multi-asset, etc. And we've been organizing interactions for them with senior government officials. And I can clearly see a very meaningful dialogue going on. I think this can actually further improve the ease of not just doing business, but ease of investing in India as well. I think which will probably be a big factor going forward.
Okay. One last question, and that is around what kind of promise does a policy continuous India bring to global investors? Now, I'd love to understand what are people talking about from that front, because 40 to 50 countries going for elections in 2024, presumably very few have the predictability of policy, at least in the large nations that India would be having. Is that a factor that is coming up in conversations? And what else would you be seeking to understand from people who are wanting to make either a fresh investment into India or double down on what they already have in India?
I think the one thing that really makes India stand out versus a lot of other EMs is sheer diversity of opportunities to invest in India. If you look at the listed space per se, it has a mix of everything, consumption to export to local to capex, and which is, I think, something that investors really appreciate. Most of the other EMs, barring one or two, have dependence on either a particular company or a particular industry, whereas India offers a lot more opportunity. I think, again, Jefferies as a firm, we are very bullish on India outlook. We have been strengthening our presence here. We've moved into a new office, hiring more people, building a new team, and clearly see India as one of the most profitable markets and growth markets for us as a firm.
Okay. Mahesh, you want to add to that?
Yeah, I think I would definitely say that a lot of investors that we interact with, and in fact we had a chance to meet with some of the business CEOs as well. I think the policy point that you mentioned, I think that is very important. And I would say that while the government itself, because of the fiscal constraints, might be, lowering the capex growth that the government has been putting with its own money through the budget, that number might come down. But I think over the last several years, we have seen, a solid foundation building by way of the GST implementation, by way of, I would say, the bankruptcy law, the private corporate leverage level is at an all-time low. The housing cycle is looking up, and with the laws like RERA getting passed, the home builders confidence, is also on the rise, which is giving longevity to that cycle. So I think all these policy initiatives are clearly going to be the key driver for growth going forward, and that's what we are picking up from here in Davos as well.
Okay, great, gentlemen. Thank you so much for joining us today, and all the best for the remainder of the stay in Davos, and look forward to interact more with you on NDTV Profit.
Thank you very much, Niraj. Thanks for hosting us.
And viewers, thanks for tuning in. In very cold Davos, we have a very special guest today, Chairman of EY, Rajiv Memani, with me out here. Rajiv, thanks so much for taking the time out.
My pleasure. Thank you.
Would love to understand how you feel about conversations thus far this year at the WEF relative to whatever you may have had in the past.
Yeah. So I would say two things. One is from a global standpoint. If I was to compare it with last year, I think the mood last year was much more bearish than where it is today. I think people were discussing whether we'll have 1 quarter of recession, slowdown, or 2 quarters, as compared to, and you know, it hasn't been the case. I think things have worked out not perfectly, but not as bad as what people thought it will be. So this year, I find people are, I wouldn't say they are bullish, but they are probably feel that you know, things will start picking up. The interest rate cycle is coming down. Inflation is coming down. Geopolitics is still a concern. AI is still, which way it will happen, is a concern. But overall, I think people feel much better. Europe feels that they'll probably do better than where they did last year. US feels probably they'll be a bit slower than where they were last year. Some pockets of Europe, like Germany and others, may go through slowdown. So that's a global perspective. From an India standpoint, I think last year also the Indian story was very strong. But I think it certainly got much more reinforced this year, because the growth this year really stands out as compared to global growth. People are also seeing whatever was committed in the budget. You know, actually we've probably done better than that. So overall, I would say things are very, very positive from an India standpoint. AI, sorry.
No problem.
AI has become much more front and center. I mean, if you walk down the promenade, you see AI much, much more visible than before. So it's really AI everywhere. Geopolitics is less muted. Last time there was a lot of talk about Ukraine and everything else. I think it's muted as compared to what we saw last year. And sustainability, there's a lot of talk till now, but I think given with the around economic issues, around AI, I think it is there, but I wouldn't say it's front and center. And then there's a lot of conversation around elections around the world. This year, especially the US elections.
Geopolitics muted, and it's a valid point. You think the world is learning to live with the fact that these things are on now and there's nothing much that can be done about it?
No, I think it's a concern. I mean, it's a big concern that people have, but I think for whatever reason, I think that's not been discussed and debated to that extent in the forum. But definitely it's a point of conversation. And people are worried, and especially given the fact that this is a big election year, I think people are more worried.
So actually, two interesting points that you bring in then. One, the India story reinforced. In some sense, some people call it oasis of growth in an otherwise fragmented world.
Yeah.
But also in a year wherein 40, 50 countries go to elections, policy continuity much more likely in India than maybe some of the others. Is that working? Are people talking about that with you?
Yeah, I think so. I think people feel that there will be a continuity in policy. So I think that factor is, I'm sure it's in the back of minds of people that we still have election, and election results are always important. One can never undermine them. But I think there's a general sense of confidence that there will be greater policy continuity going forward. And the government has a much more medium-term to long-term picture in the way they're looking at things.
Got it. I'd love to understand this from you. Last year and this year, whenever I've spoken to corporates, global corporations, they all talk about how they want to increase the India share, make in India, for India, make in India for the world. We've not necessarily seen that in FDI numbers, and you can argue that the services FDI came down as well. But how do you see this translating to actual numbers being visible at the end?
I think it's getting better.
You think so?
I think it takes time. I mean, it takes time for companies to pivot. Plus, we don't do a great job of helping people to come in, ramp up quickly, get the land, get things going. I think from our side also it takes time. But I definitely see visible signs of companies now coming. I mean, there are some companies like Apple and others who have a very visible presence. They make a big difference. In the entire telecom, in mobile handset value chain, the value addition is increasing. On the consumer side, the value addition is going up very significantly. Defense, we are starting to see early signs of in local manufacturing, and also some companies starting to look at exports and everything else. So I think I'm very bullish. I think first is manufacturing for India. I think that's definitely picking up. And I think as that picks up, more and more global companies are also trying to see how they can use India from a supply chain standpoint. And whosoever has come to India, I mean, they've had teething pains. There are issues around ease of doing business. There are issues around acquisition of land. approval processes and everything. But once they settle in and they get a good management team, I think they can see the benefits of doing manufacturing in India. So I continue to be very bullish on that.
Okay. One final question. The world will probably get used to a paradigm shift of sorts, higher interest rates related to the last 15 years. But it's also a year wherein, while rates will remain high, but it'll be a year of interest rates coming off. What's your sense about how corporates will deal with this? Because for a lot of them, not Indian necessarily, but global in nature, these are unprecedented times of sorts.
Yeah, so I think, my view is that the interest rates will come down, but may not come down at the rate or the speed at which all of us are anticipating. I think it will take time. It's how quickly inflation gets tamed is also a factor of a lot of other geopolitical issues, overall economic growth, what happens in China. So it may take more time to settle in, but definitely it will not reach the lower levels what we saw earlier.
Of course.
So I definitely investment decisions will get impacted, especially for private equity funds or financial investors. I think this will impact their valuation norms, the way they invest, and the amount of effort that they'll have to put in to sweat the assets better. I think that'll get impacted.
Okay, what stood out for you here? Is it the AI chatter at the promenade or something else?
No, I would say the AI chatter at the promenade was probably the single most biggest thing. And also I think the number of business people who have come, especially from the US, is a pretty high number. So those are the two things I would say which were quite interesting.
Mr. Rajiv, Memani, thank you so much for talking to us today.
Thank you.
On this cold evening, much appreciated your time.
Thank you so much. Thank you very much. Thank you.
And viewers, thanks for tuning in. One of the big guests on the NDTV network this year is Mr. Peter Woser of ABB. I have written this down. He's a Swiss national, but calls himself foremost a global businessman. And therefore, this is the best stage to talk to somebody with that mindset. Mr. Woser, thanks indeed for taking the time out and speaking to us here at NDTV Profit.
It's a pleasure. Thanks for having me.
Tell us, at the start of calendar year 24, in a world which is looking fragmented, we calling this the opposite of globalization, which is globalization in some sense. How do you feel about business momentum and business confidence as you look ahead for 2024, or albeit the next 2-3 years?
I think during 2023, we all experienced that we did forecast a slowdown, but it actually never happened in a big way. So we have learned out of that. I think we are carefully still optimistic for 24. I think we are looking at two different halves. I think the first half will be more challenged than the second. And I think you need to take a regional lens as well. I think the US, India, Asia except China, I think will actually just grow in the normal way, which means strong growth. Europe is lagging, has structural issues, has also had to deal with the pandemic, the wars, high energy prices, cost inflation on wages, etc. So will be slower. And China, I would also say they will most probably recover towards the second half of the year because they have some consumption issues which they need to sort out. So I think personally I'm a half glass full person anyway, and I don't see any other thing for 24 than that.
Okay, and the glass getting filled will probably happen in the second half of the calendar.
Yes, I would say so. Yes, it's more because you see during 2023 we experienced that what we call the short cycle products and orders, they were starting to slow down. At the same time, the late cycle big project business started to come in. So the order books and the revenue books were still actually quite well developed. But I think in the first half of next year, you will see the larger projects slowing down. And most probably the short cycle business will come up at a little bit later in the year, towards the end of second quarter, but normally third and fourth quarter.
Okay. It's also a year wherein, or maybe not just the year, but maybe many years of higher than the past 15 years of interest rates being there. So higher for longer. But in a calendar year where we'll see interest rates possibly come lower, how do you think the world adjusts to, or how do you think corporates like yourself adjust to higher rates, different IRRs projects, different multiples as well, discounting for various assets, including equity or acquisitions? Tell us a bit about that.
Yeah, I think over the last 4 years, ABB has transformed. And we have actually performed very well, including our India business. And we achieved our financial targets a year earlier than expected. That means we go into this interesting period, 24-25, with a strong balance sheet, a well-performing business. And that gives us the opportunities. So I think we are facing clearly a business environment where generations have never lived through high interest rates, have never lived through inflation. And I think, therefore, companies need to prepare themselves. These are different risks which we now have to manage. We have to educate the middle management who, for the first time, have to deal with these issues. Now, on the other side, there's a huge opportunity. Given the strengths we have in the company, we hopefully can take advantage of lower multiples. Because lower multiples means you can also do acquisitions, strengthen your businesses, your divisions which we have, and we will be watching for that. It may take a few months more before the multiples really come down. Now, in terms of interest rates, that's where I'm most probably a little bit more conservative. I don't see that many interest rate changes in 24. I think even the US most probably will be very careful, given that the US economy is still growing, so that the inflation is not yet at the level where it should be. So therefore, I think it's also towards the latter part of the year where we will see that. I don't think Europe will actually see interest rate reductions in 2024. That's 25.
Downturn in the benchmarks continue for the second day on a weak global cues. The bearish sentiment further supported by a mixed December quarter performance by Nifty majors. Meanwhile, mid-cap and small-cap indices decline but outperform benchmarks. Nifty Bank crashes over 2%. Tech stocks buzz and buck in trend. A dismal day of trade for HDFC Bank. The stock plunges over 5% post Q3 earnings, losing over 82,000 crores worth of market capitalization in a single day. And on our radar today, Asian Paints and ICICI Prudential are set to report their December quarter earnings. Stock trades flat ahead of Q3. Today on NDTV Profit, we get you top voices from the World Economic Forum Davos, where top economists